Is this really the bottom of the Bitcoin bear market? Or are we only in the first act of something much worse? Why did $80,000, the level everyone swore was unbreakable, get smashed so easily? And why does it feel like suddenly everyone is underwater at the exact same time? And if we're already in the bottom 20% of every historical model, why does the pain still feel like it's only getting started? According to Checkmate, one of the most respected on-chain analysts in the space, we are deep in the final fifth of this bear market. We've already done most of the real suffering, and unless your thesis is Bitcoin is dead, the hard work is basically behind us. If he's right, the next few months could be the most important buying window of the entire cycle, but only for those who understand what's actually happening. Hello everyone, and welcome back to our channel. This podcast summary video is based on Checkmate's recent appearance on TFTC. This was a raw masterclass on Bitcoin cycles, on-chain forensics, macro chaos, quantum FUD, and the psychology of bear markets. The whole conversation is over 1 hour long, but we listened to it all and organized the most important ideas into a clear, straightforward summary, so you get the key takeaways without having to listen to the full episode. If you get value from our summaries, please like the video, subscribe to the channel, and comment your thoughts below, because that really helps the channel and keeps this content coming your way. Checkmate begins with a sobering look at where we are right now. Bitcoin is trading around $63,64,000 after breaking the $80,000 level that had acted as both the true market mean, the average cost basis of active investors, and the average entry price for the spot ETFs. When that level broke, something clicked. It became common knowledge that literally everyone is underwater. He ran the numbers that morning and found that only 4% of all days in Bitcoin's history have ever been further below the 200-day moving average. Across realized price, 200-week MA, power law models, every major long-term metric, we are sitting in the bottom 15 to 20% of historical price action. More than 80% of every dollar ever put into Bitcoin is now at a loss. This isn't just a dip. This is the part of the bear market where conviction gets truly tested. Checkmate explains that he had been warning about supply air pockets for months. The zone between roughly $70,000 and $80,000 had almost no prior trading history. Price just rocketed through it in November and never properly tested it. When we finally broke lower, that pocket got filled fast, exactly the way markets hate voids. He draws the direct parallel to 2022, when the giant air pocket from $30,000 down to $10,000 was almost entirely backfilled before the real bottom formed. The move from $110,000 down to $80,000 was predictable. Now we're in the messy final stage where floors get hammered out, hope rallies get sold, and true capitulation actually prints. Checkmate argues that while everyone was dismissing Bitcoin's weakness as just crypto, it was actually the canary in the coal mine. Sky-high CAPE ratios, deleveraging, geopolitical chaos, Epstein files, tensions over Greenland, Venezuela, rate decisions. The whole world has been in risk-off mode. Gold ripping higher while Bitcoin bled created serious parabola envy. People expected the new asset to win round one. It didn't. Romans used gold. They were never going to choose Bitcoin first. But he keeps coming back to a simple decision tree. If you genuinely believe Bitcoin is dead and going to zero, sell everything and walk away. If you don't, and almost everyone watching this doesn't, then we are already in the bottom quintile of every historical model. The bear market has an end. Checkmate says people keep asking if the 4-year cycle is broken now that institutions are here. His answer is straightforward. Stop trying to force a calendar date. The cycle bottoms when there are no sellers left. Not in October, not in November, but when the last long-term holder who bought the top finally taps out at a loss and the last short-term speculator gets washed. He sees the treasury companies as this cycle's version of minor capitulation. Some will fold, some will consolidate, but the total Bitcoin they hold isn't enough to send the asset to zero. The real signal will be the capitulation week, where ETFs see massive outflows and realized losses spike across the board. Checkmate spent serious time researching quantum threats. His conclusion: it's not what caused this crash, it's still years away, and the panic-selling narrative around it is nonsense. A measured upgrade like BIP 360 makes sense even without quantum risk, because it improves taproot and kills the FUD at the same time. He then tells a perfect market top story, standing in line at a bullion dealer on Australia Day, watching people pay huge premiums on silver coins they'd bought days earlier, bragging about 3x gains, while another guy dumped bars he'd stacked for years. Classic froth. Bitcoin doesn't have that problem. It's liquid 24/7 and fungible. His advice is simple but powerful. Be the bison. When a storm hits, face it, run away, and you get soaked the whole way. We've already done most of the suffering. Unless your thesis is Bitcoin is dead, the hardest work is basically done. Checkmate lays out the key levels clearly. Realized price is around $55,000. That's the aggregate cost basis of every coin ever moved, representing about $1.1 trillion of actual capital saved in Bitcoin. Below that, you're buying at book value. The 200-week moving average sits near $57,000. Every prior bear market has wicked there. He frames sub-$70K as already deep value. Dropping into the low $50Ks would require believing something is fundamentally broken with the asset. That's the zone where you ask the hard question, am I buying something go to zero? Or is this the best opportunity in years? His final message carries real conviction. The people in Bitcoin are the smartest, most stubborn, highest conviction group he's ever met. They ignored the entire world, calling them idiots for a decade. On-chain data still looks completely organic. The smartest money is still here.